Hey, my friend and fellow trader, it's Will here over at FXAUUSD.com, and we are back again with one of my favorite trading setups for the week ahead. It is the 3rd of July 2022, and in this video we're going to analyze the British pound against the Canadian dollar and see where we think it may go this week. Okay, so before we actually get into the analysis, if you're new to the channel and haven't yet subscribed yet, simply hit the subscribe button now. And let's get into today's analyst video. Okay, so if you are new to the channel, you should know that I analyze the markets from the higher time frames down. Okay, I like to look for high probability trading areas on the weekly and monthly charts, and then zoom into the daily and the 4-hour charts to locate evidence that momentum is slowing down and price action around these kind of levels. Okay. Also, personally, for my weekly swing positions, I enter them as pending orders on a Monday, and I close everything by the Friday evening. Okay, so these are weekly swings. Everything's open on a Monday and closed on a Friday. Okay, so let's get into the British pound CAD. Okay, first off, we're going to look at the monthly charts. And if we zoom out here, from all the history we have, we are at a key area on the chart from before. Okay, you can see clearly down in here, this area here where the market is coming down towards, okay, is kind of the bottom. We had this gap down here in 2007. It was due to the markets crashing, but you can kind of see here that this is the all-time bottom on the British pound CAD. You can see the accumulation pattern here before the markets rallied up. And if we zoom in, you can see right now we're at this monthly area here where the markets created the kind of last low in 2000, I think it's 2012, kind of created the last low in, start of 2013, and then rallied all the way up here. Okay, and we're kind of coming down into this area here, and even looking at the monthly chart, you can kind of see the wick starting to appear in the monthly candles as it approaches down into this area here. Okay, so this is a key monthly area, buy-in area, that is. Okay, what I'm going to do now is zoom into the weekly charts and see, just I'll zoom out a little bit and see what's actually happening here. Okay, you can see right over here. Let me just see if we can get this up. Or you can see the market swung high here. If we can zoom in, we can go right across this area. Okay, let's zoom in a little bit more. Okay. Kind of see here, this is where the market actually broke out from the accumulation period on the first attempt. Okay, so you had the swing high here, the swing low, then the new swing high that took out these highs. It popped down, tested this weekly area, and then this created the catalyst for this huge move up here. Okay, so this is a key weekly area inside a monthly area where we can clearly see back in 2013 the market rallied off from this area before. Okay, so we've got a key monthly area, we've got a key weekly area, buying area inside the monthly chart. What I'm going to look for now is evidence that price action is starting to react at this area. Okay, we can actually see 2 weeks ago we had a huge spike down into the area and the market rallied back up. Okay, so buyers have started to come into the market. You can actually see here on the monthly charts we've had this huge down move here, a lot of red candles. Okay, then we had this change of structure in the trend here. Okay, we have this all these red candles here, huge selling pressure. Then down here, as it's approaching this monthly area here, we start to see buyers come into the market. We start to see the markets sell off, or sorry, buyers start to come in, and the change of structure in this downtrend here. We see the swing high, then a new swing low. So one push, two push, three push. Okay, it might pop down, just take out this low next week, and then push back up. Okay, so we usually get 3 pushes down into the area and then a rally up. Okay, so what I'm going to look for now on the daily charts, evidence for price action slowing down. Okay, I'm just going to add my MACD divergence Well, we'll add it in a minute because I actually know there's divergence starting to occur here. You can tell by the price action. Okay. So as we can see, the market's come back down into this area. It's reacted heavily here a few weeks ago, 2-day candles, and it's come back down to test this area here. Okay, it was the actual area that actually broke this the trend here. Okay. Okay, we see this trend down in here. 2 last swing lows. Okay. And you can see swing low, broke the trend line, and we're starting to come back down and test this area that broke the trend. Actually did it on Friday. Expected maybe pop down a little bit more on Monday. We'll see. This is likely a divergence starting to happen here. See. Okay. Did I move that indicator? Okay, move all them objects. Okay, we'll add the MACD. And by the way, if you want to access this MACD indicator for divergence signals, you can just contact me. And as I expected, you can see a lot of divergence signals starting to occur down inside this weekly area and monthly area. Okay, so this is a high probability setup. You can see it's a lot of buying divergences happening at this area. If we look at the 4-hour charts, we'll probably see a lot of sideways moving structure here, and we are seeing that. Okay, we're seeing starting to move sideways, dripping down into the area. Okay, starting to move sideways. I do expect this to maybe pop down to 155 200 area, in around that area, and then rally back up. Okay, I will likely take this next week on the first MACD divergence that occurs, but let's get into, if you are, sorry, before we actually get to the setup, if you are a little bit risk on, you can just simply enter this position when the market opens on Monday and hold it, because this is a likely very strong position to move up well above, well back up to the top of this weekly range around the 173 area once this starts to move up. Okay, so the actual setup, what I would like to do this week is buy British pound CAD at 155 200, or first 4-hour divergence. Okay, and like I said, if you're a bit more risk on, you can actually just take this on the market open. Okay, stop loss. Okay, it's going to go 130 pips, and even if it does stop me out, I will re-enter this position. As I explained, we are in a very, very, very high probability area. Okay, stop loss at 153 900. Take profit. Okay, 161. Like I said, if you want to hold this long-term target right at the top of that weekly range, I'll show you again in a minute. Okay, at 1.61. Okay, and break even. Okay, break even point is once we get to the break even area, once price reaches 156 200, simply move your stop loss to the entry price and close 50% of the position. Okay, so we are locking in profits. Okay, so that's the trade setup. I'll quickly just run over it again, the actual setup. Okay, like I said, monthly charts, we're coming into this area here, the monthly charts, kind of the all-time base. Okay, high probability monthly area. If we look at the weekly charts, we can see that we are at this weekly area where the markets had rallied off from before. In 2013, we had this huge move up here. If we zoom into the daily charts, we can see change of structure. Okay, as it's approaching this huge move down here, and we can start to see change of structure as it approaches the area. We're getting lots of MACD divergent signals, which is indicating seller exhaustion, and buyers have started to come into the market inside key monthly and weekly areas. So I do expect it to drop a little bit further, maybe down towards that 155.2, and then rocket off. Okay, so this is a very, very good setup. If you want to get access to the MACD indicator, simply message me at will@fxace.com. Again, trade at your own risk. If you want to get access to the full list of weekly setups and access to my new DayTrader X Elite Robot daily trade system, simply click the link below. And if you have any questions, let me know at will@fxace.com. Happy trading, and I shall see you on the next video. Thank you very much.